Enough of the BS all over YouTube and the internet saying this strategy works and that strategy works. I promise you, if you apply the concepts in this strategy that I'm going to teach you within your trading, you will see more results than you ever have in your entire trading career. If you guys are new to my channel, my name is Colt Mosdef. I would definitely recommend hitting that subscribe button because I have a ton of other videos based around trading that will help you guys out. And if you guys are new to my channel, I do offer one-on-one mentorship. So I don't know if it's God putting us together for a reason, but if you're a struggling trader, I do offer one-on-one mentorship. There is a link in the description where you can book a free call with me to get to know each other and see if we would be a good fit to work with each other. So without further ado, let's get to my computer and let's go over this strategy. Now, before we go into the strategy, there is a link, by the way, for this prop firm in the description. I would recommend just signing up at least. You don't have to buy an account. You will get 40% off, but if you're struggling with funds and you don't have a lot of money to trade with, I'd recommend getting a prop firm account. And if you guys don't know about prop firms, these are basically companies that will allow you to take a challenge. And if you can pass a challenge, then they'll allow you to basically trade with their capital, and you get to keep a percentage, 80% of the profit you make, and you can keep all the way up to 90% if you get a pro account. So to summarize it and make it short, this is what the accounts look like. Let's say that you want to get funded with $100,000. You'd go right here, start now, sign up. You would make the payment for this $100,000 account. And after you make the payment, they will email you, and you'll have a back office too where you can like see everything on the back end, but they'll basically give you login credentials that you will connect to TradingView. You'll go to trading panel right here, and then you'll log in with the credentials, and the balance will say $100,000. So when you get your login credentials, you'll log into TradingView, and then what you would do is your profit target, your goal is to make $6,000. So once you get $106,000 in your account, you pass a challenge, and then they'll give you a new set of login credentials that will have $100,000 as a balance. And anything that you make over $100,000, they'll actually allow you to keep 80 to 90% of the profit that you make. So that's basically how it works. You obviously can't go below $3,000. That's the end of day trailing drawdown. And they have it at a limit of 12 contracts for the mini, and then the micro e-mini, it's 120 contracts. So basically what that means is when you go here to trade, you'll have your contract set right here. For the NASDAQ e-mini, which is a contract I'm on right now, you can't do more than 12 contracts per trade. So once you do that, you guys can get funded. The max allocation that you guys can get with this prop firm is $400,000. So hypothetically, let's say you get a $100,000 account, you do on average 5 to 10% a month, which is pretty standard. You're taking home about $5,000 to $10,000 every single month in profit going straight to your bank account. So let's go over the strategy. With this strategy, I am looking at ES, the S&P 500, YM, the Dow Jones, and NQ, the NASDAQ. One thing that I want you guys to understand is these three assets correlate very similar. So if the NASDAQ is going up, YM and ES are most likely doing the same exact thing. Now, when I'm trading on these assets, I prefer to look at two of them most of the time. NQ and ES, they correlate very similarly, meaning that whatever is going on the chart for ES is most likely going on for the chart for NQ. So if I were you guys, I would pick either NQ and YM or ES and YM and stick to those two pairs. What you can do too is if you guys go to laptop setup right here, you can have two charts pulled up at the same time. So I could have, let me go 30 second, just go to my chart right here, NASDAQ on that one. So I could have YM on the right side, and then I can have NQ on the left side. So I can look at both charts at the same time. You guys can see behind me, I have a TV mounted to the wall. It's a 43-inch TV. So usually when I'm trading, my chair is on the other side of this desk and I'm looking at that TV, which has YM put on the chart. And then on my computer, I have NQ. So I'm literally sniping the market, just looking at what's going on each pair. So those are the assets that I'm trading. When it comes to the time frames, I'm looking at the 30-second time frame most all the time. You can use the 1-minute time frame if you want, but I would not recommend going over any higher time frame than the 1-minute time frame. Now, when it comes to the timing, I'm not going to say a specific window of time works the best. The markets have been a little fluctuant over the past couple of months lately. Usually for this strategy, between the hour of 10 a.m. to 11 a.m. EST, that is like the best 1 hour window of time to trade. But for all my people that are in California and on the West Coast, dude, I'm not trying to be up at 7 a.m. trading. I'm half asleep still. I haven't ate breakfast. I haven't hit the gym. So lately, believe it or not, I've been trading from like 11 a.m. to 12 p.m. PST. And I've just noticed that the market is a lot less aggressive. It's more docile. There isn't these massive moves that are going on in the market. It's very predictable and easy. And yeah, the market moves a little bit slower, but it's not slower. Your trade's going to take hours to play out. Like, I took a trade earlier and yesterday and the day before, all the days this week, and I caught perfect trades. And the duration of the trades were no longer than 20 minutes each. So it doesn't really matter when you trade. You can use this strategy during the Asia session. You can use it during the London session. It's really up to you and what you guys want to do, but I would recommend trading during the New York session. One thing that I want you guys to realize too is the charts are a little bit wonky after the market opens up again. So from 2 p.m. to 3 p.m. PST, that 1 hour window of time, the market actually closes. So look at the candles, how they were printing before. Then you can see what happens right here at 1700. The market closes, which is 2 p.m. The market closes right here. And the candles start printing a lot differently than they were before. The thing which is nice about NQ is NQ, the candles print pretty much the exact same. But with the S&P 500 and YM, they start printing a little bit weird after the market reopens at 3 p.m. PST. So when you guys are trading, definitely keep that in mind. Now the next thing that I want you guys to understand, and we're actually going to go look at an example. These are the overall market conditions that you want to be looking for. You want to see the market creating very, very clear trends. We have this higher high, higher low. It's overall in an uptrend, but the market structure is creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and continues to go up. If you are not feeling very high levels of confidence when you're trading, you should not be trading. And I'm telling you guys this right now. You're putting your own money on the line, and it's very important that when you guys are trading, you're not ignoring the emotional side of trading. Trading is extremely emotional. We as human beings are already emotional, so our emotions are very sprung when we are trading. So it's very important that you guys are taking into consideration these things. So when we're trading, we want to see a clear trend. That's the first thing. Secondly, we want to see clear market structure. Higher highs, higher lows. Higher highs, higher lows. Higher highs, higher lows. Higher highs, higher lows, higher highs. So overall, what we're looking for when the market is creating these higher highs is we want to see a fair value gap be created. So what is a fair value gap? And if you guys go right here to indicators and you type in FVG, where it says Nephew Sam, that's the indicator that I use that automatically prints these fair value gaps on my chart. So a fair value gap is right here. We have a fair value gap right here. I'm going to use this example because it's really nice. So we have this short-term higher high and higher low right in here. As it's making this higher high, it creates a fair value gap. So a fair value gap, this little rectangle that we see all it's doing is it's going from this candle's high to this candle's low, and it's creating this imbalance in price, a fair value gap. So notice how I said there's 1, 2, 3 candles that make this imbalance in price. Usually we want to see the 4th, 5th, or 6th candle retrade into this rectangle like it did on the 4th candle right here, and that's where we had taken entry. So right here on this candle would have been our entry. So ideally, let's say that we were going into a trade right here, would have went long right here on this candle. Our stop loss is always below the first candle that creates a fair value gap. Sometimes, since this candle is not at the previous higher low right here, you can drag it down to this higher low. And then for our take profit, I'm using the Fibonacci's. So these are my Fibonacci settings. If you guys go right here, you guys can take a screenshot. Take a screenshot right here, pause the video and set it up real quick. So when I'm getting the Fibonacci's, I'm going from the previous higher low to the current higher high right here. And my negative 100% level is where my take profit is. Okay, so you guys can see this offers a 1.44 risk to reward ratio. And the risk to reward ratio is going to differ. Ideally, if we did have our stop loss right below the first candle that made the fair value gap, it would give us a 2-to-1. And the nice thing about this trade is it actually never came even close to our stop loss after it hit the fair value gap. It bounced. And that's the way that I like to look at these fair value gaps, is kind of like a trampoline. The market goes up, hits the trampoline, jumps up further than it did the first higher high. So that's the way that I like to look at it. So here's an example of a trade we could have taken right here. And the duration of this trade, guys, look how quick it would have played out. 4 minutes. 4 minutes. That's why we trade on these lower time frames, because within this setup being formed within 4 minutes, if we're on the 5-minute time frame, we would have only saw these candles. There is no setup there within the trade that we took. So that's why when you guys are trading on these lower time frames, you're going to see this pattern and setup occur more frequently, and that's overall what we're looking at. So that's literally the basis of this strategy. The biggest thing is market structure. You want to see very clear market structure. If you do not see very clear higher highs and higher lows, or lower lows and lower highs, then it's not a valid setup. There's no trade there. So I hope you guys enjoyed this video. You got value from it. Like I said, I do offer one-on-one mentorship. Click the link in the description if you guys want to book a free call. And I will see you guys in the next video. Bye, guys. Not a lot of people made it to the end of the video, but you did. Make sure you share this video with a friend. Also, comment below. I want to know who you guys are and how I can help you guys out with your trading. And if you're not subscribed to my channel, hit that subscribe button. I'm dropping weekly videos every single week on trading to help you guys out. Look forward to seeing you guys soon.